Hey, what's going on everybody? Welcome to another video, and in today's video I'm going to show you the three indicators: delta hedging, time pressure, and institutional flow, which are the three institutional indicators that I use to identify the 6 market maker setups, which give me around 90% win rates. If you are looking for a system that is consistent and profitable, this is it. In fact, this is the only way to day trade that is profitable, and I'm gonna explain more about it later on this video. Now, if you're following the system, not only you get 90% win rates, you're only taking 1 to 3 trades a day with 1-to-1 risk to reward ratio, and you're gonna be done before lunch because this system only works from 9:30 to 11:30 Eastern time. And if this sounds good to you, stick around this video because I'm gonna talk a little bit more about each one of these indicators and why it makes sense, why this is so profitable. You're trading like the banks, you're trading like the institutions. After all, graphical analysis doesn't work. Do you think the banks managing billions of dollars are going to draw a couple lines in the graph, or they're going to add a Fibonacci and risk millions of dollars on graphical analysis? That doesn't work. The reason you are using graphical analysis is because a guru who has never made money trading, he only sells courses, told you to do so. It is time for a change. It is time for you to trade like the banks, like the institutions. Let me show you some of our community results. This is Fabio. He made over $4,000 today. Gustavo, he shared his week. He's up $1,000. He's been profitable every single day. This guy, he's been trading the whole week with us, making on average $200, maybe $300 a day. He's up $1,000. This is actually me yesterday. I took one trade yesterday, made 300 bucks. This is one of my Apex accounts. I left for the day, and I can keep on showing you hundreds and hundreds of these community results. You're only gonna see green results here, guys. $800, it just got funded. Another trader got funded here, and I can keep showing you. And what's cool about the system is that you're gonna see the same people sharing results. So these people are consistently making money. This guy, he made $3,000. This is not prop firm, this is real money. So only green results. Now, what's cool about this is that we keep track of all of the trades we take. If you're interested in looking at the trading journal more in depth, let me know, send me a DM, and I'll send you the trading journal so you can take a look at every single trade we took. This is for the month of January 2nd, all the way to 31st, and all of the trades that we took. As you can see, we are averaging 40 points per trade. When we lose, we're losing 40 points. That's 1-to-1 risk to reward ratio. And if we look at the month of January, we accumulated almost 2,000 Nasdaq points. If you are trading with one micro contract, you would have made $4,000. If you're trading with one mini contract, you would have made $40,000. We had 55 wins and 8 losses. And again, all of these trades right here, we take them live. We have a live trading room with the community where they can follow each one of these trades, each one of the setups. So for the first week of January, we had setup 1, setup 6, setup 3, and all of them were profitable. So the question is, how do I know how to trade like the institutions? How do I know how to trade like the banks? How do I have access to institutional indicators? Well, pretty simple. This is a family business. Everything I know was taught to me by my dad. He is a financial analyst for the BHG Bank. He is an expert on Nasdaq and S&P 0DTE. That's the only thing he knows how to do. He doesn't trade oil, he doesn't trade gold. He is an expert in the Nasdaq market. And my dad taught me all about day trading. In fact, the reason I got into day trading is because of my dad. Look, I wish I could say that my trading journey was hard, but it wasn't. Ever since the beginning, I was taught this whole system by my dad, and it's been quite easy. Making money with the market is easy when you know what the market is going to do 90% of the time. We can correctly predict the market maker movement 90% of the time. That's why we're so profitable. That's why I'm recording this video, so that you can hopefully change your trading journey as well. So let me go back to my computer and let's talk about the 6 market maker setups. You can identify these setups using these 3 indicators: delta hedging, time pressure, and institutional flow. Delta hedging reviews where the market makers are positioned. This is the key word. They're positioned so that you know whether they're going to stall or explode the market. You know whether they want to create a bounce or explode towards a direction. If you trade with delta hedging, you can know the hitting zone pressures and balance of the market. Now, time pressure reviews the time bomb behind the dealer hedging. And we're going to talk about dealer hedging in just a little bit right here. I'll talk all about how the market maker needs to hedge so that they can maintain balance in the market. Now, time pressure is a market magnet. It explodes where the price is being dragged, even before the volume goes up. Now, the cool thing about these indicators is they will tell you what the market is going to do before the market even opens. So at 9:30, we can predict if the market is bullish or bearish based on the market maker hedging. Now, the third one, before I move on, is institutional flow. It shows you where the real demand is, if people are buying, if people are selling. When you combine these three indicators right here, you can see the 6 setups. Now, for example, a bullish breakout. Now, most people are going to see the graph and they're going to draw 2 lines and say, okay, well, the market is going to definitely bounce here because this is the maximum of the day. But we all know there are times where the market just simply breaks through the highest and it keeps going and going and going forever. The market is meant for it to break higher highs and lower lows. So we can know when the day is most likely going to have a bullish breakout. The same thing for a bearish breakout, a reversion at the top. So we know if it's going to go all the way to the top, hit the top and have a reversion and bounce back. Exactly the same thing for the reversion at the bottom. We can know the days where it's going to hit the reversion at the bottom and come all the way back. And we know if the market is going to be consolidated. We know if the market is going to be within a range. And when that happens, you know what you do? You sell the tops and you buy the bottoms. And obviously the negative delta hedging protection, which is the most efficient setup that we have with 90% win rates. We know the market is not going to break this level because the market makers are going to protect it. Therefore, it's going to bounce back. This again gives you 90% win rates. And again, when you combine all of these 6 market maker indicators, you get 90% win rates, 1 to 3 trades a day with a 1-to-1 risk to reward ratio. Now let's talk about the market makers and why this works. We can correctly predict what the market makers are going to do because the market makers are the ones giving liquidity to the market. So if you think about it, this is you, okay? Let's say you're going bullish and you want to buy a contract. You're not buying a contract directly from someone who's selling. You are buying a contract from the market maker. The market maker is the one giving you liquidity in the market. So if the market maker didn't exist, markets wouldn't have liquidity because maybe you want to buy when the market is going up, but no one wants to sell it to you. So what happens is when the market makers need to give you liquidity on the market for options, specifically for options, okay, because that's the biggest market there is, they need to hedge in to the futures market. So if they're selling you a contract here, they're going to hedge into the futures market so they can avoid losses. The market maker doesn't need to make money. The market maker needs to break even. He needs to avoid losing money. So when we know the market maker needs to avoid losing money by hedging into the futures market, we know what the market makers are going to do. Therefore, we know where they plan on moving the prices. Now, the market makers, they don't exactly manipulate the market in a bad way. You know, a lot of people will say, hey, I took a trade here. I had my stop here. As soon as I went bearish, the market went all the way down here, took my stop, it came back up. So they think the market is manipulated. That is not true. The market maker doesn't do that. The market maker has a structure and they respect the market structure because they need to respect it, therefore, again, to avoid losing money. Now, think of hedging as a way to protect yourself. And hedging exists everywhere. I like to use the airline example. So let's say you're a customer and you want to buy a plane ticket for $1,000. The company receives $1,000 and what they do is they invest $500 into the oil stock. Why? Because how could you buy an airplane ticket 6 months from now? Shit, I thought I wasn't recording. Without even knowing how much the oil prices are going to be at. After all, the oil prices could double in 6 months and the airline company is going to lose money. So what they do is they sell you a ticket now for a certain price and they invest that money into the oil stock because if the price of oil goes up, they make money on oil covering how much ever expense extra they had with your ticket. Now the market makers do the same exact thing. Now, when you understand hedging and you understand that the market makers are going to hedge, you can correctly predict the movement 90% of the time. So you know the market makers are going to drive prices up. So what do? You enter long with the market makers. That is how the banks are trading. And that's where the institutional indicators come in. Now, what's cool about Quantico Cap is that we added buy and sell signals helping you with your entry points. A lot of people will see the direction of the day. They'll see that the day is bearish, for example. They will see a target target over here, but they won't exactly know when is the right time to enter. That's where market aggression and absorption comes in. For example, today, in the beginning of the day, we said, look, setup 6 is a bounce. So if the market is moving down and he touches setup 6 and he bounces, you can buy. But if he breaks setup 6 exactly like he did over here, then it's a sell. So you're looking for selling opportunities. So as soon as he broke setup 6, it went up again and he broke again, you're looking for selling opportunities. And our signal here just happened to give you a beautiful trade all the way to the lower setup 6. This would have been your exit right here. From 624, where we got the sell signal, all the way to the target at 620. You could have made easily today $5,000-$6,000 from this trade, depending how much margin you had and how many contracts you were using. Now, let me go back and show you exactly what you can expect. Here you have the Quantico Cap platform with the institutional indicators and the buy and sell signals. We opened the day, we had targets above, we had a sell signal here, all the way to setup 6, which I entered today and I made around, I believe was $180. As soon as we got setup 6, I closed the trade. I waited for it to break. When he did break right here, we got another sell signal, and I wish I would have waited all the way to the lower target, but I closed at around 622, which made my day. We have an AI giving you the direction of the day, what the market is most likely going to do. As you can see here, the bias is bearish. This was given to us at 9:30 a.m. in the morning. So you know the bias is bearish, you're going to avoid the buy signals. So if you know everything is telling you to look for selling opportunities, why would you go for a buy signal right here? You're looking for selling opportunities. And as you've seen, the day just kept going down and we kept giving you sell signals all the way to 618. And as I told you before, we trade from 9:30 to 11:30 or 11, depending how the day is. After this huge movement, you shouldn't be trading anymore. You should be out. And again, that's why the community is making so much money. So if you want access to our system with 90% win rates, with buy and sell signals, with institutional data, I strongly recommend you click the link below and you're gonna go to a page where my dad, the guy who developed the whole thing, he built all these institutional indicators himself. He explains to you through a webinar exactly how they work. So there's no one better to explain than my dad. I strongly suggest you click the link below, watch the webinar. If it makes sense to you, get Quantico Cap, because I'm sure this will change your trading results forever. Thanks so much, and I'll see you in the next video.